Inflation is dead. It's gone. What does that mean for you, the national debt, the US dollar? I'm going to discuss that right here today in this video. Stick with me. It's going to be jam-packed. We're going to look at also what's happening in other countries and then relate that, because that's going to give some insight as to what's happening right now in the United States. I'm going to give you some strategies to make 5% in a month. Can you believe this? Let me show you. Right now, you are looking at inflation at 3%, flag the end of the emergency and a turning point for the Fed. Headline rate is the lowest since March of 21. Core measure cool. The core measure, if you're not aware of that, is the Federal Reserve and what they like to look at. They want to look at something that does not include what they call volatile food and energy. Now, if you and I are looking at this and we're trying to actually make sense of it, it's going to be weird because they're not including the most important stuff. But of course, that's what they do. Even in their own measurement, it is still what some economists consider to be too high. Okay, so those numbers there, despite what they're going to show us, they're going to give us these manipulated stats, it's still important to look at them. The core PCE rate, personal consumption expenditure, and the CPI. Okay, the CPI is the one that you would see on the news. And of course, consumer price index is important as well. The businesses that hire people, they're going to base that off of what's happening with these official inflation statistics. So it does affect the economy. It's not real in the sense that, you're actually going to be seeing that level of inflation in your life. No, but the businesses and of course the financial companies and the central banks and everything, that's reliant on these stats. So I do cover them, and it is important in that way. But we have to be aware of also the real levels. And that is truly when you start to understand everything, because you're only really going to get one or the other. And that's how I notice oftentimes that we see this information portrayed. It's either one side or the other. No, we got to understand both, piece them together, and then we know the truth. Here we go. We got this. Inflation drops to the lowest level since March of 21 as the economy is cooling down. There's much more to it than that. Inflation rose just 0.2% in June. That's less than expected as consumers get a break from price increases. Now, I was just saying in the previous video to this, I had gone to the store, got some toilet paper, and my goodness, I couldn't believe the price. It is unbelievable. Something so simple. Remember, this isn't a luxury good, luxury item that you're going to see something that is priced very high, and the average wealthy person can absorb that. Oh, you know what? No big deal. Just another $1,000 for this product or that service. We're talking about the basic essentials being priced way too high. Now, I've heard from people say, you know what, actually, my price increase is barely there. Inflation's going down. I experienced that. That is an anomaly that's very unusual, because everybody I talk to, they're constantly saying that things are more expensive. Constantly. You got to understand, it's not just one thing or the other, and you're not even factoring in shrinkflation. You're not even factoring in when you talk about services and things where, it was a bundle before of 5 things. Now you're only getting the main thing or 2 things or what have you. People don't factor that in. You are going to go buy a product today, go buy it a year ago. There's less of it available to you. Simple matter of fact. Even if you don't realize that, it's just like, the paper towel and the toilet paper. Instead of it being this many sheets, it's that many sheets. Have you noticed this? Now you got to go to the store when you're buying your toilet paper, and you got to do mathematical calculations. I had to pull out my calculator and start doing this. 12 rolls is equal to 24. 24 is equal to 36. All these different things. I mean, it's getting so wacky. What the hell is going on? What's going on? Please. Can we just get back down to reality? Okay, here we go. Here is the inflation breakdown for June 2023 in one chart. I wanted to show you something. This is very unusual. Okay, you could see it in the list. All these different things. Motor vehicle repair is up. Frozen vegetables, oddly, are up 17.6%. That could be due to, droughts and things like that when we have usually with that extreme case. Anyway, if I look at the bottom, this is crazy. Health insurance down 25%. Right near the bottom, second last thing. 25%. Okay? I'll hold it there for a second so you can see that. But do you personally believe that your health insurance costs have gone down by 25% year over year? Do you think so? You let me know. If you are in the United States, let me know if your health insurance costs have gone down 25% from last year to this year. You can let me know in the comments below. And if you have a family member or something that you may have heard from them, please let me know in the comments. I think that is skewing the statistics and it's making things look a lot better than they actually are. I don't believe that for a second. And, that's just the way it goes. But here it is. So the US dollar takes a beating as traders see US rates peaking. So this is what happens. Okay, let me explain it for those who aren't aware that when you have the US dollar in these time right here where it's depending on where we're looking and we're comparing the US dollar versus other currencies, but understand this. If we do have high levels of inflation, the Federal Reserve is going to increase interest rates. When you increase interest rates, you strengthen your currency. So we have seen the Fed funds going up to, such a high level here, and that strengthens the US dollar and it makes bonds more attractive. So let me break it down. If you want some sort of investment that would give you at least a government guarantee, we'll call it that, like you're talking over 5% for 1 month treasury. And while we could, obviously there's long-term problems here. The government is in so much debt. All governments are in so much debt. But know this, that we can see it through the cycles and you can benefit from this, or at least protect a small part of your total portfolio. For those in the US, you can use Treasury Direct and you could be getting in there. You could be purchasing these instead of a portion of that. You don't want your whole portfolio, you go sell it, you go put it in there. But we're talking about very short-term debt that you could be utilizing 5% or more and consistently roll that over. Take that new 5%, put it back in. Instead of keeping it in some stock or something that you're really not attached to and shouldn't be attached to, you could be utilizing this during this time of high rates. I hope that was valuable to you. So you see what happens here. Inflation goes up, interest rates start to rise, the currency becomes more attractive, in the case of the US anyway. Currency becomes more attractive, bonds start to give you some real good returns. On the other hand, the stock market, it really depends, okay? It really depends because of the amount of liquidity in the system. But that's a whole different story. That's the money mirror method. Here we go. I want to show you what else. Some interesting things. Talking about Canada and others, I wanted to show you this. First Bank of Canada hikes rates to 5%. 5%. Central Bank doesn't see inflation returning to the target until mid-2025. Quite similar to what the Federal Reserve had said. And so this is, in the case of Canada, 5%. But look, isn't that where the Fed is? I mean, the other countries are around that same, whether or not it's 5%. They're at a high level compared to where we've been for the past 10 years, right? And so the currency can strengthen at this point because, they're concerned, what are we going to do? Are we going to increase more? I don't know. Well, housing costs have gone up dramatically in Canada in the major cities. The major cities of Canada, the housing prices are entirely unaffordable and people cannot pay it. Okay, it's just a matter of fact. The debt has risen to levels that are unsustainable. We have a mathematical problem that is absolutely certain, and you cannot get around that. Look at this. In the case of Canada, the 1 month bond yield is 5%. So just think about that. I mean, we didn't see this for a long time. I mean, they were given negative yield before, negative yield. Now you're actually getting a return from that. So I think it's interesting just to look at it. Like, mind you, I do not trust these governments in the sense that, they're going to default when they eat, whether that's from a heavily inflated currency or whether that's just, they just say, we can't pay you back. In the short term, it seems like something that people should be looking into. That's all I'll say. And actually, I was talking about that on one of the mentorship classes recently, that people should just, in order to have risk parity, you want to hold on to something that makes money, whether the stock market's going up or down, your ETFs are all out of focus, your cryptocurrencies are this, your real estate's doing that. You want to be able to bring in that cash flow. And every month or 3 month or 6 month or whatever it is, you're going to get a return at the end of that once it matures. So all this is talking about the financial pressure building on several fronts for Canadians. And of course, you look at that and the amount of debt that people are in right now, it should not be of any surprise to people. Everyone who has experienced a change in their wallets is saying that they're worse off, and it's not dominated by any particular group, and the pain is being felt across the board. I mean, then they're blaming, the funny thing is, a lot of that, they're blaming the high interest rates. No, it's the low interest rates for such a long period of time that created this artificial boom, and now we're in trouble because you're carrying too much debt. But it's not just the individuals that took on too much debt. I'll show you in a second. It's shocking, okay? But that's the circumstance we're in today. So you got to be able to pay off your debt as best you can. If you are in a variable mortgage, I've got a video for you that is in my financial education playlist. Definitely check that out. But at the same time, you got to watch out if you're in places like Canada, Australia, and so on, where after a period, you have to renegotiate, refinance your mortgage after 3 to 5 years. A lot of that debt is actually coming up in basically over the next year. So if we can expect that interest rates are going to remain high, this is an issue. This is no question an issue. And also with the commercial real estate, which is in a much worse situation than the residential, that is something that happens in the US as well, where the debt is always shorter term. Always shorter term. So now we've got a lot of this coming up, well over $1 trillion worth coming up in the next year. Do you see an issue with that? Oh, big time issue that's unfolding right now. Bank of Korea, they're basically saying to keeping the rate at 3.5% for the fourth straight meeting. We will see. They're open to increasing, but haven't done so yet. This is considered to be hawkish. I don't know how that's hawkish, but here we go. The point here is that they are not cutting rates. Like, most central banks are not cutting rates, and that means that the US dollar, if the US is going to cut, which the expectation is that they're actually going to increase at this coming meeting, but the market is already looking ahead. They're saying, yeah, okay, they'll increase now, but maybe we'll get a cut in September. Maybe we'll get a cut, a few before the end of the year. That's how it's pricing it in. And the dollar is weakening against these other countries that are basically saying, we're going to continue to do this. We're not going to change our tune, even though they're all going to go in the same direction. We know that to be the case. The labor market in the US is starting to show cracks. US added the fewest jobs since 2020. Prior 2 months revised down. Broad unemployment are an issue. You got to look at it. In fact, the way I see this is basically that all of these jobs, so many of them are temp jobs. You have the other issue where a lot of the people who would have genuinely had retired, they can't do that. It's not like they want to be working and so on. They literally can't. The stuff is too expensive. They got to keep it going. And that, my friends, is an issue. That's a problem. Okay, so we see these things popping up in the labor market, but we're not going to we're not going to be able to, understand how how powerful that really is, okay? Because if somebody suddenly takes on a second job, yes, in fact, they can now afford to pay that $1 million mortgage maybe, but what does that do? And there's always going to be a ceiling when people can't afford their basic essentials. Basic essentials. Maybe the toilet paper, who knows? And this is the one I wanted to show you. Global public debt. It's a record $92 trillion. Incredible. There's different types of debt, of course, how you're calculating it and so on. But the point is that this is I mean, there's no way that this could ever be paid back. So what do you, the individual, take from that? We have way too much debt. Our governments are paying interest on that debt. More and more money is being shifted towards the debt repayment and not going towards infrastructure, not going towards education and all the essentials of healthcare, whatever. It's going towards debt repayment. The longer it does that, the longer it takes away from productive means. So we can see economic weakness simply because your taxpayer dollars are not going to the right place. At the same point, you can also see that, the more we do this, the more they'll have to increase our taxes. And as they increase taxes, that creates a slowdown as well. It is not a solution in any way to increase taxes. So there are many different ways that this is basically hitting us left, right, and center. You have to do what I call the pillars of prosperity, which is increasing your income as well as self-sufficiency and preparedness. It is essential. You have to get into these things, at least one of the two pillars. When you were talking about making more money, we're not just talking about working overtime at your current job. I'm talking about building a business on the side. This is something that I talked about. I got videos on this. I got playlists. We talk about it in the mentorship, all of these things, because I see it with my very eyes, how people, they're just struggling and they're never getting anywhere. They're a hamster on a wheel because they're trying the same things, getting the same results, and wondering why nothing's changing. That's the difference between, a circumstance that will end up being good. Like, it's tough. It is tough out there. I'm not denying that. And you got to realize something when, a lot of people, they go out there and they think to themselves, I'm just going to do this, this, and this. Oh, everything's going to be A-okay. When it doesn't happen, they get crushed. They get the reality check, and then, they give up. Or are they going to use that and say, okay, fine, didn't work. What am I going to do next? Let's make it happen. That's how I have always been. That's just the way it goes. Okay. You get these down moments, you take these dips, these dives do happen, but you rise up above it. And when you do, you're stronger and you're smarter than when you started. That's just the way it goes. It is very difficult. Life is difficult. The central bankers are making it much harder on us. We know that, but guess what? It's not going to change. So you can sit there and sit idly by, or you can take action on it. It's really up to you. That's what we're here to do. If you want, we got a great community, a growing community. There's something like, almost 600 people in it on Discord. What is Discord? It's like a chat program that has these cool like automations and things that I think is very valuable. Check it out, link in the description for the Discord, and we share stuff. We're getting in there comments every single day that we can actually do so. And don't forget to comment on these videos too, because there is a community in with that as well. So I really appreciate you being here and your time. If you want anything from me, put your suggestions here. Let me know what you think. Hit that Discord. Join me over there. I'll see you next time. Take care.